Hi there everyone, it's Jason here. Welcome to the next masterclass in the series, and today's, as you can probably tell, is being pre-recorded, but we will move back to our live sessions with effect from the next one, which will be the following Monday. So tonight I'm going to talk about the profit and loss account, and I've got a trial balance in front of me. You'll see it's got a certain shade of grey to it, which I will explain about in a second. So I've got a completed trial balance in front of me, which, as I say, I will run through just to sort of briefly go back on any elements that you need to catch up on, and just to explain a bit about what the trial balance is and how it works. And once I've done that, I will extract some information from this trial balance, and it will then sit in the profit and loss account. So I will compose a profit and loss account very, very slowly in great detail, explaining what I'm doing at each stage and where each figure fits into the P&L basically. So we're going to start off looking at this trial balance very quickly, and as you can see I have shaded half of it grey. Now there is a reason for me doing that, and it's this. Because we're concentrating on the profit and loss account tonight, the P&L, then I shaded grey the figures that we will be looking at. So this box here, this grey box here, contains the P&L items, and this box here, which I've not shaded, contains the balance sheet items. Now that's quite quite normal for a trial balance. You'll find that with most trial balances, if not all of them, that the P&L section, the items that go in the profit and loss account, will appear in the first part of the trial balance, and the balance sheet items will appear in the second part. So it doesn't always work. I've come across a few bits of software that produce the trial balance the other way around. Not that it matters, as long as the figures balance at the end of the day, that's all that matters. But you'll usually find the P&L items are grouped together on the trial balance, and the balance sheet items grouped together as well. So it does make it a little bit easier, a little bit easier to interpret, I guess, when you've got a trial balance in front of you, in order that you can pick out the profit and loss items as a block, and you can pick out the balance sheet items as a block as well. But I know we've gone through debits and credits a lot. I know it's a big subject. I know it's a popular subject. So I'm not going to touch too much on double entry and T accounts, certainly not tonight at all. But I will just explain to you how these figures on the trial balance come about. So the first figure you'll see is a sales figure. Now sales are always, I'll stick my neck out here and say always, a credit balance. Pretty common, as I say. We've done lots of work on double entry before, and we'll know that sales are a credit balance. Now these expenses here, so I say expenses, we've got cost of goods sold, which we'll go into in a minute, and the rest of these are expenses, are nearly always, if not always, debits. So sales credits and expenses debits. Now I'll just quickly run through the balance sheet items on the trial balance, even though we're not actually going to use them tonight because we're just looking at the P&L. When we come on to look at the balance sheet next time round, we will be using these figures. But I'm just going to quickly run through these figures and just explain why they're debits and why they're credits. I'll say it's not really relevant to tonight's session, but it's always handy to have a little bit of extra knowledge in these masterclasses as well. So the first number we've got here is premises. So premises is a fixed asset, so it's always going to be a debit. And motor vehicles, just the same, is also a fixed asset, so that's also going to be a debit. Accounts receivable, you may have heard of it as debtors. That's money owed to the business, so it's an asset, a current asset of the business rather than a fixed asset. We've got accounts payable, which is trade creditors, and that's owed by the business, so that's always a credit balance. Then we've got cash in the bank account. Now on this trial balance, it's a debit, so it's plus cash, if you like. It's not overdraft. It's money that we've actually got in the account, so it is a debit balance. And we've also got cash in hand, so petty cash can't really be a credit balance. You can't have credit balance of physical cash, so cash in hand is always a debit as well. And then we've got drawings, so this is money that's taken out by the owner, so that's always a debit as well. And finally, we've got the capital account, so that's money put into the business by the owner, so that's always going to be a credit balance. So that's the capital account. I know I haven't gone into too much detail about those balance sheet accounts, but hopefully if you've watched the previous masterclasses, then you'll know that I've covered double entry and T accounts quite a lot. So if you do need refreshing on that side, then please do go back and view those previous masterclasses. But for now, as I say, tonight we're just going to concentrate on compiling our profit and loss account, and we're just going to use these figures in the grey box here. Now, you'll also notice just underneath the trial balance, I've got a little note here. It says inventory, so that could be stock on hand as well. At 31st of December was 12,408, and that is quite relevant because we will use that when we compile our profit and loss account in a second. So obviously, in this particular business, the trial balance has been extracted from the accounts, and then right at the last minute on the 31st of December, the business owner has done a stock take, and there's £12,408 worth of stock or inventory in the business. So, as I say, it's quite important. It does form part of our P&L, and of course it would form part of the balance sheet as well, but for now we're not too worried about that because we're not concentrating on the balance sheet tonight. Okay, so I'm going to scroll down my screen slightly. So I've got the profit and loss account here full of zeros at the moment because we're going to compile it as we go. But you'll see I have done several boxes. I've completed several boxes here rather than just having it set out as a sort of table. I've boxed each particular area. Now, again, there's a reason that I've done that, and it's basically to show you that a profit and loss account normally follows a certain format. So the first section of the profit and loss is going to be the sales. So that's the money that we've had in, the income for the business, which is always first. So I've just got that in a separate box there, as you can see. Now in our next box, which is here, it's going to be cost of goods sold. So that's the sort of first expense section, if you like, in the profit and loss. So cost of goods sold, again, I'm not going to go into too much detail about what cost of goods sold is. Hopefully you will be aware of what, how we come to talk about cost of goods sold and what they are. But for now, I'll just say that the cost of goods sold part of the profit and loss account is always directly after the sales. So cost of goods sold, in a nutshell, what it is, it's the money that it's cost you to make, if you like, the sales that you've made in the profit and loss account. Not an ideal explanation, not a brilliant way of explaining it, but cost of goods sold are always variable. They're variable because they're based on the sales that you've made. So for example, a very quick example, if I can come up with one off the top of my head, we often hear about widgets when we're looking at accounting books. Certainly in manufacturing, we're always talking about widgets and how many widgets a business has sold. So in other words, if you're going to sell 100 widgets, then it's obviously cost you something to make those 100 widgets. If you've made 50 widgets, then it's cost you something to make those 50. So what I'm trying to say is the cost of goods sold is always relative, that's the word, relative to the sales that we've made. It's not a fixed expense, it's not an overhead. Cost of goods sold, not overheads. Overheads, which are down here, or expenses, remain pretty fixed. So in other words, it doesn't matter if you've sold 1 widget or 100 widgets. Stuff like your rent is always going to stay the same. Your overheads are always going to stay the same. Your salaries are pretty much always going to stay the same. If you're paying someone to make these widgets for you, you need to pay their salary whether they're actually making widgets or not. That's maybe a bit of a basic example, but it's just trying to get the point across, really, that cost of goods sold are very, very relative to your sales figure. Hence them being directly after the sales, and hence them being the first part of the P&L, not the first part of the sales, but the second part of the P&L. So hopefully I haven't confused you too much with that explanation. So next we're going to have gross profit. So the gross profit is the profit that we've made selling those widgets less what it's cost to make those widgets. So less the cost of goods sold. So gross profit, a very important figure. So it's literally the sales minus the cost of goods sold gives us our gross profit. So our gross profit is how much money we've made from selling our widgets less the direct cost of making those widgets. Then, as I say, we've got the overheads, the expenses, what I talked to you about just now, which will remain pretty constant. So those overheads, those expenses aren't going to change depending on what we've sold. So they're fixed costs, and they form the next part of the profit and loss account. And hence after that, after the expenses, we've then got the final part of the profit and loss, which is net profit. So that is the gross profit less the overheads or the expenses. And the net profit is what the figure we end up at. It's the final figure of our profit and loss account. But hopefully it's all going to become clear as I now sort of start to fill the figures in. It's hopefully going to take shape, and I'll show you how it works as we go on, really. So the first figure we're going to look at is sales. So if we go scrolling back to our trial balance, rather than using them as direct references to cells, I'm going to actually type the figures out. So our sales figure is 190576. So that's our first figure to go in there. So I'm going to put 190576 in there. Okay. So at the moment, don't worry too much about the gross profit and the net profit, because they're obviously calculated figures, so they're going to change as we enter our figures into the P&L. So, I will mention another thing about indenting the titles on the P&L. I just think it makes it a little bit easier to read. This particular accounting book that I've pulled this example from is a Frank Woods Business Accounting, and all the P&Ls and the various other sort of bits and pieces that relate to accounts that are illustrated in the book. I make quite a big use of indentation. So that's what I've done today. So it just makes it a little bit easier to read. So for example, in the cost of goods sold, we've got less, because obviously the cost of goods sold comes off the sales before we get to the gross profit. So it's just to indent it and make it a little bit easier to read, and just to help you, really. So the first figure that we're going to enter on the cost of goods sold is purchases. So that goes in there. So the amount of purchases, which we can see there, are 119832. So I'm going to put that figure in there, 119832. Okay. Now, my next figure that I need to enter in the closing into the trial balance, is closing inventory. So this is the amount of stock we have left as at, in this case, the 31st of December. So we have a figure here, 12,408, and that's what I'm going to put into that box there. So 12,408. Okay. So that's made the cost of goods sold 107,424. So that figure represents the purchases. So that's how much stock, or whatever you want to call it, how much in the way of cost of goods sold we've actually bought for the business, less the closing stock figure. So we need to take the closing stock figure off of what we've bought, because we still have it left at the end of the period. So therefore it's not relevant to those sales. And I hope that makes sense, really. That's why we take off closing stock at the end of the period. So it's £12,408 that we've got left as stock sitting in our warehouse. We haven't used that stock to generate those sales, so we have to take it off the purchases figure. I hope that makes sense. So in other words, I'll try and say it another way. This closing stock figure of 12,408 is included in that purchases figure of 119832. But the reason we need to deduct it is because it wasn't used in the period to generate those sales. So I hope that makes sense. So the actual cost of making those sales was the purchases less the closing stock, which is why it's 107,424. I haven't complicated things by adding opening stock into this one. As it happens, opening stock wasn't included in this example, so I've gone for the sort of most basic example to demonstrate how the P&L works. But quite often in the P&L, certainly when we come to run next year's P&L, we'll have an opening stock figure. And in next year's P&L, that opening stock figure will be 12,408. But as I say, I'm not going to complicate it too much now. But the reason that we have opening stock and we have closing stock is because we have to make sure the P&L is accurate, and we have to make sure the cost of goods sold figure is directly relative to the sales figure. So using our figure of 107,424, it now is, because we've deducted the materials, the stock that we have left at the end of the period. Now, if you do need any clarification on that, maybe drop me a comment after in the post that we're going to put onto Facebook when I finish recording this. Certainly put a comment in the box below the video clip if you need further clarification, or if you don't quite understand what I've said. But sometimes stock is a little bit difficult to get your head around how it works, cost of goods sold, how they work. Hopefully that's explained it a little bit. But as I say, if you do need further clarification on that, then by all means drop a comment on the post. So our next figure in the P&L is gross profit. So that is 190,576, which is our sales figure, less our net cost of goods sold, which is 107,424, and that gives us a gross profit of 83,152. So as you can see, we're not taking the 119,832 from the 190 because we had some of it left at the end of the period. So it's just to sort of reiterate that fact, really. So hopefully that makes sense, and hopefully you can see how we got to the gross profit of 83,152. So now we're going to get to a little bit of an easier part of the P&L, which is the overheads, the expenses. So salaries, let's go and have a look at salaries. We'll scroll back and salaries are there, 56,527. So we'll enter that there, 56,527. Okay. Motor expenses is next. So motor expenses is there, which is 2416. So we'll enter that there, 2416. Okay, and then we'll go to rent, which is 1894. So we'll enter that in there, 1894. And insurance is next. So insurance is £372. So we will put 372 in there like that. And finally, general expenses, £85. So we'll go back to general expenses and we'll enter £85 in there. Okay. So we've then got a total of our expenses, which is 61,294. So that's adding up those expenses, those overheads we've just put in to give us that total there. And then finally we come to our net profit. So the net profit of 21,858, that is the gross profit of 83,152 less our expenses of 61,294. So our net profit at the end of the year, in this case the 31st of December, is 21,858. And don't forget that we've got a closing stock figure of 12,408. That's where it gets entered in the P&L. It does get entered in the balance sheet as well, but I'm not going to overcomplicate things this time round. I will show you where it gets entered in the balance sheet on the next session. But closing inventory, closing stock is just something to be aware of, and it does appear a lot in questions, in AAT questions, and certainly in the books that I've got. You'll quite often get a trial balance with a note of the inventory at the end of it. So hopefully I've explained how that works and how you treat that note in the accounts. As I say, obviously you do need to treat it correctly when you come to drawing the balance sheet up as well, but that's not something for this time round. That's going to be next time. But for now, just be aware that it does go in the P&L as closing inventory. Okay, so we've now used all our figures in this shaded grey box. So the P&L, as far as we're concerned, is now complete. The box here, which is the balance sheet items, I'm not going to worry about today. That's going to be in the next session. So our P&L, our profit and loss account, is now complete. So hopefully you can see where we got to, how we got each of those figures, how we reached our calculated figures, and how we got to our net profit. But as I say, if you're requiring further clarification, or if there's something you're not sure about, obviously because this isn't a live session, I can't have any questions on the fly, which is what we normally do. But if you have any questions about anything I've said, or even if you've enjoyed it, even if it's helped you, please do let us know in the comments box, because it's valuable to me when I'm doing these masterclasses. It really is valuable, your feedback. If it's helped you, I'd like to know. If there's things you don't like about it, I'd like to know. If there's things you do like about it, I'd like to know. But most importantly, if you have any questions about it, that's what I really want to know. If there's anything I've said in tonight's session that you're not sure about, please do pop a comment in there and I will attempt to answer it as best I can. So that just about wraps it up for tonight's session. So it hasn't been too long, but you know what I'm like with these masterclasses. I don't want to throw too much at you at any one time. It's very much a case of doing this in bite-sized chunks. But in the next session, which is going to be live, and it's going to be next Monday night at 7 o'clock. And what we're going to do then is look at the balance sheet. So we're going to take those figures there, those figures that are boxed, and we're going to draw up our balance sheet next week, and I'll show you how the P&L and the balance sheet sort of works together, and we will show you that we've used all the figures in the trial balance. We'll show you how you We'll show you how the inventory works, and we'll basically put the whole puzzle together. So this is the first part of the puzzle, if you like, the P&L account, and the next part is the balance sheet, and we will complete that in the next masterclass. So I've been Jason Blackman. I hope you've enjoyed that. Love your feedback in the comment section after you've watched it. Really hope you've enjoyed it. And for now, take care, and we'll see you all next time round. Thanks very much.